For financial summary, stay here. For full earnings call recording, skip to minute 2. MAHSEAMLES financial results for September 2025 quarter with YOY comparison. Revenue 1,159 crore rupees versus 1,292 crore rupees, YOY, with a change of -10.29%. Expenses 1,040 crore rupees versus 1,065 crore rupees, YOY, with a change of -2.35%. Other income 76 crore rupees versus 91 crore rupees, YOY, with a change of -16.48%. Profit before tax 169 crore rupees versus 292 crore rupees, YOY, with a change of -42.12%. Net profit 125 crore rupees versus 220 crore rupees, YOY, with a change of -43.18%. EPS 9 rupees and 35 paise versus 16 rupees and 42 paise, YOY, with a change of -43.06%. Operating profit 119 crore rupees versus 227 crore rupees, YOY, with a change of -47.58%.
Ladies and gentlemen, good day and welcome to the Maharashtra Seamless Q2 FY2026 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that the conference is being recorded. I now hand the conference over to Mr. Vikas Singh. Thank you and over to you, sir.
Thank you, operator. Good afternoon, everyone. On behalf of ICICI Securities, I welcome you all on Q2 FY2026 Maharashtra Seamless results concall. From the management side, we have with us Mr. Kaushal Bengani, Head of Investor Relationship and Senior General Manager. Without taking any much time, I'll hand it over to Kaushal for his opening remark. Over to you.
Thank you, Vikas. Good afternoon, shareholders, and thank you for joining our earnings call. During Q2 FY2026, we have been able to dispatch 103,000 tons of seamless pipes, which is in line with the quantity dispatched in the previous quarter. However, margins were impacted due to 3 key reasons. The first is the slowdown of expenditure in oil and gas sector, which we've pointed out earlier as well. The second is continuous Chinese dumping, which has not abated. And thirdly, there was a notional markdown of inventory to comply with Ind AS requirements. The encouraging sign in current pipes environment is that our order book has been replenished on a quarterly basis. However, significant margin revival appears difficult as of now. On the treasury front, there is a decline in other income on a quarterly basis, but on a half-yearly basis, it has shot up to rupees 235 crores in H1 FY26 vis-a-vis 155 crores in H1 FY25. I will briefly summarize key financial points. On reviewing our Q2 FY26 performance versus Q1 FY26, revenue declined by 5% to 1,234 crores. EBITDA declined by 27% to 123 crores. PAT declined by 44% to 130 crores, and EPS was at 10 rupees per share. Whilst EBITDA declined by 27%, the decline in PAT was higher in Q2 FY26 because of a sharp increase in other income in the previous quarter, Q1 FY26. Apart from financials, there are 4 key points which I would like to draw attention to. The first is the credit rating, which remains at AA+, and it's the highest credit rating which the company has received in the past 11-12 years. The second point is the treasury, which is at 3,115 crores as on 30th September 25. It is being judiciously managed with engagement and inputs at highest levels. The third point is with reference to our order book, which has improved by 20% from previous quarter and is now at 1,378 crores. On the capex front, at Telangana, work is continuing. We have issued purchase orders of 80 crores till now, and payments of 52 crores has been made. We expect the line to commence by the end of this financial year. That is the entire brief. I would now request Vikash to kindly open for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohammed Farooq Umar from Pearl Capital. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Could you provide insight into the current challenges affecting the company's order book, especially in light of Chinese seamless pipe imports? We would also appreciate details on Chinese current production capacity and domestic demand for seamless pipes, the main reason behind the dumping in Indian market, and what kind of government support the company is receiving to mitigate these effects. Additionally, do you foresee any shift in demand that might improve the order situation? Thank you.
I refer to the comments I've made in the opening statement that there is a slowdown of expenditure in the oil and gas sector. That slowdown started few quarters ago and is continuing. We do not see any indicators to conclusively say that the slowdown is well past us. The good part that is being reflected from the communication that we've put out is that we have been able to replenish the order book. However, margins are expected to stay muted. On the Chinese dumping front, there is overcapacity in China and products are being dumped into India. We have started working on the enhancement of anti-dumping duty. The present anti-dumping duty is not so effective right now. That has also been communicated earlier, and it is in place till October 2026. Any enhancement or continuity of anti-dumping duty will only be known after October 2026. However, the continuous Chinese dumping has affected margins of the entire domestic industry.
Okay. The company's current holding holds a significant cash reserve of 3,000 crores, including investments. Approximately, this is around 200 to 250 per share, and has a relative modest capital expenditure plan of around 850 crores in the coming years. Could you share management perspective on the rationale behind maintaining such a large cash balance, and whether there are any plans to return capital to shareholders through dividends or buybacks?
In the past few years, we've quadrupled the dividend which we would pay out earlier, and I think the level of dividend which we've given out in the past, we will maintain that. We've done that in financial year FY25 as well. The rationale for conserving cash has been explained many times on earlier conference calls, and I would urge you to kindly refer to transcripts of those calls. Nothing has changed since then, and we continue to retain cash.
Okay, sir. The last one. Given Maharashtra Seamless strong market leadership in seamless pipe, its substantial cash reserves, there is very low PE ratio in the market, around 9. It is interesting that the market still seems to lack of confidence in the management. Could you please elaborate on the key reason behind this market skepticism, and what steps management plans to take to enhance the investor confidence?
We are market leaders, as you rightly pointed out. However, the entire industry is facing the effects of the slowdown of capital expenditure in oil and gas sector and the continuous Chinese dumping. Members of our peer group have also seen a decline in company valuations, and it is not something which is exclusive to our organization. The headwinds are not exclusively being faced by Maharashtra Seamless, but by the industry as a whole.
Thank you, sir. Thank you, and all the best.
Thank you.
Thank you. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, continuing with the previous participant's question, how much capacity is there in China and how much overcapacity is there currently?
I am surprised that this question is being asked by you to me when you are a industry analyst. So I'll urge you to refer to the data sources that you have, because you have access to a larger database than I do.
Sir, actually what I wanted to understand is from the overcapacity, how much imports are happening in India currently from China?
That is a different question. So imports are as high as 20-25% of the total domestic industry size, which is impacting the margins of the entire industry.
Okay. Thank you, sir. So secondly, according to the Seamless Tubes Manufacturers Association of India, the seamless capacity in India is currently 1.9 million ton, whereas the demand is 1.3 million ton. So if we say 20 to 25% of the industry size, so is it the right number if we take 20 to 25% of the 1.3 million ton demand that they have stated recently?
Those numbers are not correct, because they refer to nameplate capacities, which is different from actual capacity. Actual production of seamless pipes in India is around 9 lakh tons. So the 20-25% is linked to the actual production of 9 lakh tons annually.
Understood, sir. So, sir, with regards to that, now with China dumping, has there been, what is the current market share of Maharashtra Seamless, and has there been any deterioration compared to last 3 years?
there has been no deterioration compared to last 3 years because we are still on track to manufacture 4 lakh tons of seamless pipes in this financial year. We have done around 2 lakh 6,000 tons in the first 2 quarters, and we will maintain that run rate.
Sir, but in 2 years back also it was 4 lakhs.
I'm sorry?
So 2 years back also we were doing 4 lakhs.
Yes. So there has been no decline.
But the market, some new players have come and market is also increasing every year.
Market is not growing so much. Market grows at around 2-3% annually, not more than that. Because the customers to whom we sell are oil and gas players. If oil and gas exploration is not increasing in India, then the market cannot grow.
Okay, sir. And sir, exports used to be exports primarily to US used to be one of the key markets for Maharashtra Seamless. Now with the change in tariffs, how do you see the supply chains change and where do you see this settling down in the next 6 months?
Exports have not been very good. They had started to revive towards the end of calendar year 2024. However, due to the anticipation of the tariff tantrum and the actual tariff tantrum, export order has not conclusively improved. And that is the position as of now.
Understood, sir. Sir, in your PPT it mentions that previously we used to give that out of the total order book we have certain number of orders from drill pipes. So this time that is not mentioned, and it also mentions that some more
are no orders for drill pipes. I would urge you to please read what is mentioned in the PPT. It is mentioned that orders for drill pipes are awaited. So if there are no orders, then how do I write that there are no orders?
Yes, sir. So how much orders are you expecting?
We are waiting. We don't have any visibility right now.
Okay, sir. Is there any update on disposition of General Explorer rig from the books?
There is no update on the proposal that you mentioned. The rig is in the final stage of refurbishment and will be deployed in about 10 days' time on its new ONGC contract.
Okay. So last question is with this commissioning of this new line in Telangana, and considering the product mix that we have in seamless pipes, is there a headroom to go up the value chain within the seamless segment? And are we planning for any such thing in this Telangana line or in future?
We've gone up the value chain already. And the only reason why we are doing this in Telangana is to ensure that the existing capacity is fully utilized. The line that we are putting up in Telangana is a finishing line. We already have manufacturing capacities of 2 lakh tons in Telangana.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Vinay Nadkarni from Hathway Investments. Please go ahead.
Yeah, thank you. So just 2 questions. One is the revenue from operations basically has dropped to 1158 from 1259 year on year. You basically pass on the cost of raw materials to the customers, right? So the decrease in raw materials would have been passed on. What explains this? And there is no much change in your employee cost or even other expenses that have been curtailed. What explains this drop in EBITDA to such a level of 27% year on? 46% year on year.
There was a notional markdown of inventory because the raw material prices have fallen. When these orders are dispatched, the effect of notional markdown will be reflected in actual profit. So there is no cash loss. It is only an accounting adjustment.
And is there any quantification of this notional loss of markdowns?
Our realizations have not declined, and the product which has been dispatched, the quantity, that has also not declined. So I think if you add cost of materials consumed with change of inventory of the previous quarter and of the current quarter, then the difference between these two figures would be largely attributed to the notional markdown.
Okay. Fine. That's one. Secondly, what is the reason why there is so much of variance in EBITDA per ton in ERW? Between quarter to quarter, it just keeps changing so wildly. Is there any particular reason?
Yes, the ERW segment is actually a composition of two sub-segments, the oil sector ERW pipe and the water sector ERW pipe. What had happened was that the oil sector ERW pipes orders, which are API certified pipes, those orders were dispatched in one quarter instead of the gradual dispatches that we usually experience. Therefore, the ERW margin in the first quarter was significantly higher than what it was in the second quarter. In addition to the difference in product mix in both quarters, there was also the effect of the notional markdown of inventory.
Okay, so oil ERW pipes have a higher EBITDA per ton.
Yes, they are API certified pipes. We manufacture both types of pipes for the oil sector and for the water sector. Margins in the water sector are lower, much lower than the margins in the oil sector.
And just one last question. When I look at your CapEx allocation, that statement remains the same for quarters to come. Is there any... See, in your commentary, you give me the breakup of how much has actually been utilized. Is it possible for you to mention that in the presentation itself, or is it not?
We can do that, but there is no problem on that point. But the issue is that the market has changed since the time we put out the capital expenditure plan. And we are looking at a situation where margins may decline by few hundred rupees from now. So we will have to do a reassessment. Therefore, we don't put it out.
So this capital allocation might change going forward in the coming quarters. Some of them might be delayed or something of that sort.
It has already been delayed, and there may be further delay on other items of capital expenditure depending on the market conditions. Because the effect of Chinese dumping on the entire industry is apparent across financials of all peers.
Yeah, I've seen that. And lastly, on this cold drawn pipes, which last quarter I think you had mentioned that it will commence production in this quarter. Any update on that?
There were two draw benches which we had put out. One of them has commenced production. The other one will commence production in about a week from now.
Will it
but
impact
it's a value addition product with very low tonnage. So it will support us in an environment of declining margins.
Thank you very much. Thanks a lot. All the best.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Yeah. Namaskar, Kaushal ji.
Ji, namaste.
Sir, can you just come again for the last point the earlier participant was mentioning about the cold drawn? I am unable to understand. Can you please repeat it once more?
There were two draw benches which we were planning to put. One has already started operation. The other one will start operation in about a week's time.
Okay. And these are with respect to the Nagothane facility?
Maharashtra facility. There's a different manufacturing facility in Nagothane where we are doing this.
Okay. Sir, when you have mentioned earlier also the adverse impact of the Chinese dumping, you have explained to us that it is particularly to certain specific product. Since the anti-dumping is there, but some products were left at that time or they were not in the basket. So how much do that products actually take the pie that are impacting? What are those specific product in specification that have now being targeted especially by the Chinese, and is that product only that is in significant demand, or this anti-dumping duty का जो महत्व था वो कैसे उसकी कैसे benefit कैसे down हो गया है? That was my question.
The value addition products that we have developed after 2016, they are not covered by the original anti-dumping duty. Those products are namely cylinder pipes, sour service subsea seamless pipes, and drill pipes. These products were not manufactured in India in 2016 when the original anti-dumping duty was implemented. So that effect is there on the entire industry. In addition to that, the products on which anti-dumping duty was implemented, the prohibitive effect of the anti-dumping duty is no longer there. Therefore, the entire market is now open for Chinese dumping. And that is why we are seeing a decline in margins, mainly.
Sir, you mentioned about the formula to create to figure out what was the notional loss. So have you the numbers handy with you just to get that understanding that we were looking at EBITDA per ton in the vicinity of 12 to 15,000 if I'm not wrong. So does that hold good for the later half of this financial year, even after eliminating the impact of the inventory losses?
For the second quarter, if there were no inventory losses, which are entirely notional, I would reiterate, then we would have made margins like we did in the first quarter of this financial year, or maybe slightly higher than that, because our realization has not declined and the tonnage that we've dispatched, that has also not declined. Even other expenses have been curtailed. So definitely we would have done margins in the range of what was done in the first quarter of this financial year. The effect of this notional markdown will reverse when these products are dispatched in the next quarter. So there is a possibility that in the third quarter, margins will not decline so much if realizations hold.
And for the second half, since we have an order book which we will be executing over a period of 4 months from now, that will cover entire quarter 3 and some portion of quarter 4 also. So you can give us some understanding that this margin holds. This should be a bet, at least for what we have done for first quarter. That is a reasonable estimate.
Oh, I cannot confirm. You want a confirmation, I cannot give you that confirmation.
No.
I will tell you why I cannot give you that confirmation. Because
please.
The notional effect of inventory markdown or inventory valuation increase, that I cannot figure out right now what the prices will be on 31st December. That accounting effect has to be considered. Otherwise, I can tell you that margins on an absolute basis have not worsened as much as is being reflected in the results. But having said that, there is also the effect of slowdown of capital expenditure in oil and gas sector and Chinese dumping.
Right, sir. Sir, on the premium threading business, although some work has been underway for developing and I think so some premiumization with a Japanese player, where are we, sir, in terms of we concluding that part and then introducing the product?
They have issued a license certificate to our wholly owned subsidiary, Jindal Premium Connections Private Limited. So work is on track.
And what portion of the target market we will be able to access once all the formalities are done with?
We are working on this right now, and I don't want to disclose because this is also available to our competitors.
Not an issue, sir. Sir, lastly, sir, on the tonnage part, as you mentioned that our tonnage has remained in this, I'm talking only for the seamless, just to be in particular, that it was 103 for both the quarters. And last year, sir, we had sales of 4,42,000. So taking into account the current order booking and also you have some color on the bid pipeline also, are we in a position to be closer to this 442 number for the year as a whole in terms of dispatches?
I think you should take the run rate that we've done in the first 2 quarters because it becomes increasingly difficult to sell products in an environment where the customer is not required to buy as much pipes as we want to sell because of a slowdown of expenditure in the oil and gas sector.
Okay. Right, sir. And lastly, sir, on this CCI part of the story, although all the updates have been, whatever necessary updates were provided to the stock exchanges about CCI looking for some information for previous financial year. Any update on the same and for which financial year exactly the inquiry has been initiated?
There is no update in the sense that they came to our offices and they collected whatever data they wanted and they have asked us for more data which we have provided to them. That is all that I can tell you right now. But there is no effect of that on our regular business operations.
Right. And my last point would be on the other income component part. So when, as per the accounting standard part, we need to keep the entire treasury book mark to market. So yes, sir. So, sir, since your presentation is very elaborate, if we could also provide us with how much actual profit have been booked and how much is the notional part, where should investors get that number? And secondly, sir, we have also seen in some of the corporate, whether the accounting standard permits, that the line item is routed through the other comprehensive income also. So if that could be the take from the audit part, then this number affecting the profitability to a greater extent would be eliminated. That was my understanding and suggestion, sir.
On the OCI part, we have checked with our auditors who have taken a view that if the instruments in which you have invested are not on a long-term basis, then you cannot classify it through OCI. You will have to route it through other income because a significant portion of the treasury is linked to the equity market. Then we have decided not to do that because we may or may not want to capitalize on market fluctuation.
Okay.
Regarding the point that you made in relation to realized profit and unrealized profit, that is not required to be disclosed. However, if you still want it, then it will not be appropriate to provide you only the realized and unrealized profit on the treasury part, because there are also other components like rent and interest and
Other
provisions which are written back and other receipts. So unless I give you all of that, you will not be able to make a thorough assessment.
Okay, sir. Right. That's all from my side, sir. I'll join the queue if I have any follow. Thank you once again.
Thank you. The next question is from the line of Manavu Mehta from Vridhan. Please go ahead.
Hi, sir. Good evening.
Good evening.
With regards to the cash with the company, I understand company has been holding a significant amount of cash, around 3,000 crores. And earlier as well, you had explained you plan to hold the cash for some acquisition. I just want to understand the perspective of the management, whereas we have been holding cash for a while now for some future acquisition which might play out or which may not. Instead of that, why is the company not investing in some renewable projects, whereas it can generate some recurring revenues in solar or wind, where we already have a small vertical? Why don't we invest some good chunk of amount in that vertical?
We already have 59.5 megawatt of renewable energy capacity, out of which 1 wind and 2 solar plants are in Maharashtra and 2 solar plants are in Rajasthan.
Yes, I do understand, but we can scale it up as well, right? Where we can generate recurring revenues. I mean, we are earning good chunk of profits from that as well, around 27 crores per year.
We earn EBITDA of approximately 60 crores from that every year.
Yeah. And my question was, why is the management not focusing over there?
We looked at the economics, and unless there is some form of incentive available at the time of putting the project, it is not giving us meaningful returns. To that
What
effect,
kind of incentive?
To that effect, we have petitioned the government in Telangana that we want to scale up our operations in Telangana, and therefore we are desirous of putting a solar power plant. But open access permission has not yet been granted over there. That is the only renewable energy project which we are looking at right now.
Okay. Yeah. And on the capex front, I'm assuming since you mentioned we are facing some headwinds from Chinese dumping, are we going to reduce it going ahead?
Let us finish what we've started. Let that project end, and then we'll update you.
Okay. All right.
Thank you. The next question is from the line of Vinay Nadkarni from Hathway Investments. Please go ahead.
Yeah, thank you. Just a follow-up on the inventory notional markdown. You have been on record saying that for every order that you get, you do a back-to-back arrangement for the raw material, so it gets blocked. and should not therefore pay. So what was the need for this notional markdown? And is this a one-off thing or is it audit requirement? Or was it a old material?
It is a accounting requirement. I'll tell you what I mean. Suppose I sell pipes for 500 rupees, and when I get an order for 500 rupees, I will buy raw material, and I have bought the raw material for 300 rupees at that point in time. Then the order remains unexecuted because I still have some time for delivery of that order. And in the interim period, if there is a quarterly closure and the price of raw material has fallen from 300 rupees to 250 rupees, then the inventory that I hold, for which I have paid 300 rupees, I will have to mark it down to 250 rupees. Therefore, the notional loss of 50 rupees will be booked on the quarter end. In the next quarter, when the order of 500 rupees which I have taken, for which inventory has been purchased at 300 rupees and was subsequently marked down to 250 rupees, that order is dispatched, then the profit I will earn on that order, assuming no conversion cost, would be 250 rupees.
Understood.
So, a loss of 50 rupees in the first quarter, which is entirely notional, and a profit of 250 rupees in the next quarter.
So the 50 rupees profit in the next quarter is also notional. It is actually 200 net.
It is actually 200 only.
Yeah.
Correct. So on a per order basis, I have not lost any money, but due to the accounting adjustment, the effect is reflected in the financials.
Fine.
The accounting says that at the end of any reporting period, you have to value stock. So stock is valued at lower of cost or net realizable value. So at the end of the quarter, with the example that I have just taken, the net realizable value of the stock of 300 rupees was 250 rupees. Hence the markdown.
Yeah. So this will happen the reverse way when the raw material prices start going up. So yeah, I understand that. Okay, just one more broader question. As I can see, I mean, the company is honestly very well managed, so therefore it's heartening to see all the parameters checked out. But since your over-dependence on two major customers, which is oil and gas and those two of ONGC and oil, and one single product, which is seamless pipe, you get, rogered because of the movement. And is there any plan to address this issue, maybe diversify, maybe do something? Is there any thought process on that? And don't take me wrong, you may, it is your call ultimately.
Sir, we don't want to diversify. We have been market leaders for the past 35 years. We want to retain that position. If you look at the history of the seamless pipe industry in India, all of our peers, without exception, have either been bankrupted or they have approached bankruptcy courts. We are the only company which has not done any of this, and we have been cash rich at all times. It is not something which has happened through luck or sheer coincidence, but due to certain principles of management which are followed, which we want to stick to. Now, these principles of management may not align with the interest of the equity shareholder on a short-term basis, but in the longer term, the benefits are available for everyone.
Absolutely. I take that point. I think this was also discussed last time, and you had mentioned the same thing. So the only threat from Chinese dumping, I don't know how long it will last, but it does drain out all the efforts that you are making in running this more, so well. That's all from me. Thank you very much.
Thank you, sir.
Thank you. A reminder to all the participants that you may press star and want to ask a question. The next question is from the line of Krishna Kumar from Retail Investor. Please go ahead.
Yeah, good evening, sir. My question is related to the margins. And what would be the sustainable margin? I presume that since you have taken notional losses, that should be coming back in the coming quarters. But what should be the sustainable margin we should be looking at in this kind of depressed scenarios?
In the past, we used to make margins of 7,000-8,000 rupees per ton. Then margins shot up to 30,000 rupees per ton. I think, sir, the larger band is between 7 to 30,000, and a more reasonable band is 8 to 15,000. I don't believe on a medium-term basis margins can be sustained at elevated levels, because something or the other happens in the crude oil industry which affects the margins of all players.
Okay, so what would be in a percentage same EBITDA margin would be? Like 15% or something? Or?
It cannot be measured. I would urge you to go through the transcripts of the earlier calls. It is very difficult to forecast margins because we sit on an order book of 3 to 3.5 months. Therefore, for me to forecast margins for the quarter after the 3-month quarter is not possible. Other pipe companies which you may encounter have order books of 7, 8, 9 months or of a longer duration, and therefore it is easier for them to forecast. But for us, that is not the case.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Yeah, sir. Thank you once again. Sir, when we, as you mentioned about the dumping from the Chinese counterparts, so specifically if you look at oil exploration in the country, they are mainly carried out at a major part is from ONGC and Oil India only. So with respect to the specific products, they are then ONGC and Oil India are buying from these Chinese players itself with reference to the product of subsea pipes and the drill pipes, or there is no demand that is money. How is that math working? Since I think so, some embargo is there for them only to purchase from the Indian players only.
Sir, this happens through the dealer route. So Chinese manufacturers sell to a dealer. The dealer then participates in the tender and sells to the eventual customer. Okay.
So then they are able to bifurcate that part of the story also, where I think some 250 crore something worth of orders need to be only routed through the Indian player. So that goes with the dealer part. Okay.
Sir, yes, sir. And sir, on the project award, I put out a new point on slide 17 of the presentation.
Yes, sir.
It says that project awards have declined 27% year on year and 13% in Q2 FY2026.
Right.
It further says that although tender announcements have reached record highs, actual awarding remains delayed.
Right, sir.
We are also facing that situation, and our peer group is also facing that situation.
Okay. So I was coming to this point only, sir. Then how should we look at the bid pipeline? The time it is taking to mature and the orders being finally AOP being handed over is getting elongated. But do we rely on the bid pipeline in terms of making the assessment of how the order tendering will be going ahead, since it's now become a elongated process?
In order to run a mill, if direct tenders are not being received, then we have to sell more to the dealer segment where margins are lower. Because the furnace in which billets are heated, that furnace is operating at all times. So we have to ensure that the mill keeps running.
Okay. So we are running at optimum level
Yes, sir. The dispatches have not fallen. However, margins have been impacted.
Correct.
And
We have to.
in a situation where order book visibility is reduced, we are unable to bid aggressively because we have the constraint to operate our mills, and hence we want to capture whatever order is available.
Correct. Right, sir. Okay, sir. That answers the part of the demand issue, and we have to see how the second half plays out and the budgeting aspect for the state PSU in terms of the final tendering process. So that will only give us an understanding how our order book shapes up going ahead. Correct. Thank you for all the replies, sir. And for the in the presentation, sir, when you mentioned about the liquid investment part, if we could also quantify to us, since in the annual report we have seen that a large portion of it is in the liquid funds itself. So if we can give the breakup of mutual fund or give a note on pertaining to what is subject to the market vagary, means the stock prices moving up and down, and how much is pertaining towards the liquid funds, where there is negligible chances of any downward mark to market. That would suffice a lot, I think. So 2584 is what the number is for the mutual fund. So further granular details in terms of liquid funds and the funds exposed to equity links, that would be very helpful.
Okay.
That's the only suggestion, sir. And all the best to the team, sir. And we hope that we hear much more on the capital allocation policy, the rig high work part, that these are.
Thank you. The next question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Hi, sir. Just a little bit clarification. When you said that your project has already been delayed, does it also account the new 100 KT facility because of want of order book? And secondly, usually November onwards is the time when ONGC and other oil and gas companies starts, giving us the tenders for bidding. So these two things, if you could clarify, it would be helpful.
On the Telangana project, the reason why I said that it was delayed was because it was supposed to be concluded by December 2025. However, in the previous call or the call before that, I had guided that it would be concluded by March 2026. And that is why I said that it has been delayed, not because of want of orders, but because of some additional time taken by one of our vendors in delivering essential machinery. On the other point, which was ordering by PSUs, we are hopeful that ordering inflow will happen in the second quarter, but till that happens, we don't want to give a guidance that it will happen. But generally, in the past, we have seen that in any financial year, the second half of the financial year is better than the first half of that financial year, irrespective of the market condition.
Noted. That's all from my side.
Thank you.
Thank you, ladies and gentlemen. That was the last question for today. We have reached to the end of the question and answer session. I now would like to hand over the conference to Mr. Vikas Singh. Thank you.
Thank you, operator. On behalf of ICICI Securities, I would like to thank the management for giving us the opportunity to host them. Now I hand it over to Kaushal for his closing remark. Over to you, sir.
Thank you, shareholders. for participating on a holiday. And thank you to Vikash and Madam Moderator for working on a holiday. Thank you.
Thank you. On behalf of Maharashtra Seamless and ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.